Welcome to Trading Lounge and the US indices, and starting with the S&P 500 here on the weekly chart, and we're on track here from this primary wave 4 here, looking for 5 waves up of intermediate degree of 1 and 2 and 3 here, an A wave, a B wave and a C wave for wave 4 as an expanded flat correction in Elliott terms, and then wave 5 to the upside. So from B to C here we're looking for 5 waves. So let's go to the daily chart and we're looking at it as 1 and 2 here, and then 1, 2, 3, 4, 5 to the third wave, fourth wave pulling back to the fourth wave of 1 lesser degree, and then we're looking for 5 waves down in this section here. From 4 to 5 we're looking for 5 waves. So let's go to the 4-hour chart here, and in this instance here we're looking at wave 4 here with 5 waves down here for wave 1, ABC back for wave 2 here, and then we're looking for 5 waves down for wave 3 here. Wave 3 here, as I would have mentioned before, will be longer and stronger than wave 1, and then we'll have wave 4 and wave 5 here. So we're in definitely in wave 3 here. So if I can just clean these up here, do a bit of housework while I'm here, and don't need that there, don't really need that. We did use this green one here to short the market, but just to give you a rough sketch here, you probably know this anyway from our charts on our website, but down for 1 here we'll look for wave 2 to come back. There is a gap there on the cash market at 2685, which is very close to 27 here, so we'll be mindful of that gap, and then we'll see wave 3, 4 and 5, something of this nature here for this particular wave 3. Wave 4 will pull back 38.2%, or to the wave 4 of 1 lesser degree within in this space here, and then we'll see wave 5 move down to complete that. So 2500 as a rough figure at this stage. So we've got quite a few short positions on at the moment, so let's go in and have a look at those. So let's just get this 1-hour chart into perspective here. So I'm thinking, well, we're looking to short in the green box here. We're also shorting on this trend line coming through here. We're also shorting on this particular low here. We're also shorting in this space. We're also shorting in this space here. And we can also too, on this low here, we can also look to short that there as well. Now the hitch in this is that we'll look at this in more detail in a moment, but we're looking at 5 waves moving down here. So we're looking for an A wave to come back, a B wave here, and then a C wave up. As I mentioned, there's a gap at 2685, so sometimes the market may just, the futures market, want to finish closing those out. It could extend up to the 27 here, but just be mindful where that gap is at the 2685 here, and then we'll see a strong move down into this space here. So we want to be able to just get my little B wave out of the way there. So there's a couple of things here. If I can just borrow this one over here. So like we did here in this larger picture ABC here, and it's at this space here that we want to short. Now in this case here, we have to wait for the A wave to come in, the B wave and the C wave to come in before we can short that. At the same time, I reckon this is the low here, but of course I can be wrong. So if this low is breached, we want to be adding to the short positions here as well. So just logical step-by-step strategy, you know, not being fixed on one side. And also, you know, if you were going to make a mistake, what's it likely to be, and what would you do about it, you know? And that's the way that I like to move forward, because analyzing the market is one thing, trading it is another thing. Very rarely can you find people that can do both of them, so it takes a while to do it, you know. So yeah, some people can't be analysts, but they can be fantastic traders, and vice versa. So So I'll just go into the tick chart and we'll look at this move coming down through here. And I'll need to bring in some more tick data here. So yeah, so from this top area here, from this wave 2 here, this is where we got to kind of figure out a few things. So like hopefully you should have some short positions in, and especially this here. This is basically the market's moved through the level here, the 2700, so we don't chase that. We wait for the retest to come back and hit that level. We can use that low here, but then we can come up to that low here. We can also come up to that low here. You can short this in here at the 2700, but I do suggest that you look at the cash market or the futures market. This is the CFD market that I'm looking at here, because what you would normally see in terms of reading the volume in the market is that you would see this move up here on lower volume than the previous move down, and the volume confirms the price action. So if the volume was lower while this is moving up through here, you know that there's nobody coming in and buying it. It'll just be short covering, and corrective moves are on lower volume, so that you'll know it's corrective and it's not going to go very far. So you can short it here as long as you know what you're doing. You can do anything as long as you know what you're doing in this in the market. So I'm thinking that that we've got this last structure in here. Let me just double check some of this. So I think this is the low here, and we've got 1, 2, 3, 4, 5 going up. So up for 1 and back for 2 here, and then we'll push up for 3 here. So I think that we should take part profit. You either take, everyone's different. So taking part profit or total profit here. So I'll leave you to sort of ponder that. You might just want to leave these positions in here, this one here at least, and this one here. You may want to, take the profit on that one, and we can look to sell. We remember that there is a gap at 2685, which is in here, just there. So it may not just reach this. If I can just put this into a green color to mean that we'll look to short it in that space. So that's where the supply, the market's going to reflect from this consolidation over here. It will, it has a memory, so to speak, a little bit like muscle memory. It's sort of something that you can't see, but it's there. Yeah, let's just see how this pans out. But by all means, if this low gets taken out here, then we're going to be cascading to the downside. So you want to be short from that point there. The other point that I want to make too is that this number here, 2650, is quite significant. It's significant in the way that, yes, 27 is important, 2700 is important, nice whole number, so is 26 here. This number here is also the halfway mark from the 25, which is a medium level, and also the 28 here as well. So it's a number that I call out a lot, and normally what I find is if I can just come back to, say, an hourly chart here, a bit messy, I know. So this is the medium level here, this one here, and the 28 here. This is the halfway mark. It's also the halfway mark between the 26 here and the 27 here. So it tends to play out. I mean, it's an unusual sort of number, but like I mentioned, the 27 is important, as we can see over here, and the 26 will be important. But for some reason, we can always get a nice balance point out of this. So what I'm suggesting here is that let's just humour me for a moment and say that the market does push up into this space up here, and we get some sort of correction up here. Once the market comes back down and finds this number here, the 2650, as a retested resistance, you need to be short from that point, right? And we'll be looking down. We won't only be looking at the 2600 here, we'll also be looking at the 2500 area here as well. And in terms of Elliott Wave, this is what Elliott traders are always looking for. They're looking for the third wave. So from this green wave 2 here, we're going down into wave 3, so that's important, and we're trading that at the moment. We're doing everything right here, and then we'll be in this wave 3, so wave 1 here and wave 2 here, so we'll be in this wave 3. So we'll not only be in a green wave 3, we'll also be in this wave 3 as well. And then also too, when it comes into play, this wave 1 here will be there, and wave 2 will be here, and wave 3 will be in here. So in this case will be the third of the third here. So this is going to move quite swiftly down through here, and it will be longer and stronger than wave 1 here, of course. So yeah, I think it's always nice to leave some skin in the game, especially when you're in a trend, because mistakes can be made, it can get emotional, and there's always that thing, you know, woulda, coulda, shoulda, and blah, 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 and all the rest of it. So you just need to take the next logical step. So, and I probably wouldn't even take any profit here until the 2650 became the support. So let's also do that as well. And I'm just changing this, not from, but just part profit here. We'll take part profit here if the 2650 has got support. I'll just write this down so I remember. So tested support on that. And that makes sense then, doesn't it? Because we're under the closest largest number, and we'll see how that plays out. So that will keep us safe, and that'll keep all our trades in play here as well. So that's what I call taking the next logical step, even though I'm not logical all the time, but I try to be. Okay, so the NASDAQ is same. So let me just find tech stocks here. So just on the 1 hour chart from wave 4 here, we were looking all of this down as 1, 2, 3, 4, and 5 here. ABC didn't quite get short, it fell short of our green box up here, but we still got it here and here, hopefully. We should see all this down here as wave 1, and we'll see this as an A and a B and a C coming back into this box. If this didn't come back to the 61.8% mark, and below is like 40%, maybe even a tad lower, then this is likely to do the same here as well. So the important number in here is the same number that I was talking about on the other one. It was just also a 665 number. So 6650 here will be critical in the rally here. So we also want to look to, if I can copy that, to go through there, and also to, if I can copy that, we also want this. I don't want to take that reference point. I want to take a new reference point, because that reference point is going to belong to that one. So I'd need a new reference point coming in here if that was going to be the case. So yeah, if that was, yeah. Anyway, you know what I'm talking about. So that's all good there. So in this case here, we can look for. Let me just move these in here. The third wave, this third wave from 2 to 3 here will be longer than wave 1 here, and then we'll have wave 4, and then we'll have wave 5 down here just to make wave 3, and there'll be wave 4 there. Just to get a bit of perspective on that, we'll go to the 4 hour chart just to see there. So I mean, that's quite an extension in there, isn't it? We'll just trade what we see. So one of the important points here, though, is that this number here, which is 6,500, this is a medium level, and it's halfway between 8,000 and 5,000, and it will play its part there as well. Probably not such a big part, because we're going to be in the third of the third in the most powerful point of the trend structure here, so hopefully we'll just cut through it like butter. But normally we would spend some consolidation time there on this number. But yeah, so in the bigger picture, you know, whatever happens here, you know, we'll get the bounce off here, which we're getting at the moment, and then eventually it's going to migrate from being support to resistance. So then you need to be on the short side, and we need to be looking down here lower for this. So yeah, looking quite good on this picture here. Alrighty, I'll leave it at that. Thanks for tuning in. Much appreciated. Cheers.